and welcome to Your Stocks in the Mumbai's news studio. I'm Ekta Batra. Well, it's turning out to be a session which is stable for the markets, and it has been through this entire week. So no complaints really coming in. What stands out is the mid-cap outperformance. So we have the mid-cap index, which is up around 0.7% today and has gained over 3%, 3.5% on a week-to-date basis. No complaints coming in for the bank nifty, up around 107 odd points. Lot of stocks in focus. In fact, the advanced decline ratio is indicative of that, around 2,300 stocks advancing to around 1,700 stocks declining on the Bombay Stock Exchange. M&M is your top gainer on the nifty. It's up around 2% at this point in time. Adani stocks continue to be in focus. So Adani Ports is up around 1.8%, and even a couple of other auto stocks such as Eicher Motors giving M&M Company, that stock is up around 1.5%. Well, joining us today, we have Shahina Mukadam, who's an independent market expert, and Vaishali Parekh, head of tech research at Prabhudas, Lilladher, to answer all of your queries. Shahina as well as Vaishali, thanks very much for joining in. Vaishali, let's start with you. It's a stable day for the markets, good going in terms of the advanced decline ratio. What does this tell you about the larger trend?
Very good afternoon, ladies. So yes, I think market, as far as the index is concerned, is pretty much in a range-bound move. But we are cautiously positive with 23,100 as support for this week. And we are witnessing a resistance at 23,500 right now. So that's what where we are precisely. As far as Bank Nifty also, we are just hovering around within the range of 49,300 to 50,200. So nothing much to talk about the index, but stock-specific, sector-specific, we are seeing a lot of action.
Okay, so stock-specific and sector-specific, a lot of action. Nimesh Kapoor writes to us from Haryana, holds 10 shares of ONGC, which is bought at 77. He wants to know what to do, whether he can buy more shares or not. He's sitting on a profit at this point in time. Buy price was very good for ONGC, and it's really been doing well in terms of a stock. It's given returns of 34% this year. Vaishali, what would your recommendation be?
So I would say currently it is in a positive territory, because we saw just a few days back a wild swing right from 285 levels to a low of 223. And it's again given a very strong bounce back. So I would say on a near-term basis, keep 260 as your stop loss. And once the stock moves about 285 to 86, this stock is ready for a target of 300 to 320. So that is how one should be looking at this stock. Bias is positive, but 260 should act as a stop loss.
Okay, all right. What about you, Shahina? ONGC, your fundamental call on the stock?
I would agree. One can actually hold and also add at current levels. Basically, valuations are very attractive. At about 3.8 times EV by EBITDA, it's extremely attractive for current year. And we are likely to see increased cash flow that will go towards reducing their debt. And also, I think production across oil and gas is likely to increase over the next 2 to 3 years. So I think it's going to be a stable period for them over the next 2 to 3 years. So one can definitely add.
Okay, well, one can definitely add ONGC. That stock has given returns of over 75% in just the past year. So clearly a rank outperformer there. We have Dilip Vaidya, who writes to us from Mumbai, holds 300 shares of Tata Elxsi, which is bought at 833. He's a long-term investor, wants to know the future prospects of this counter, sitting on a very good profit when it comes to this particular counter. And it's very heartening to see people holding on to these kind of quality stocks for a longer period of time. Shahina, he is a long-term investor. Dilip, he's already sitting on a very good profit when it comes to Tata Elxsi. Do you think that he should probably hold on to his gains, or do you think that maybe taking some profits off the table is prudent?
Well, for a very long-term investor, the stock has given phenomenal returns. But if you were an investor in the last 2 years, the stock has underperformed across its peers, across the index, overall index also. I think the main problem over here is the valuations. And they continue to be, expensive despite the underperformance that we've seen over the last 2 years. So even now, if you see valuations, EV by EBITDA 40 times. Current year. So I think, the consolidation is likely to continue over the next maybe 1 to 2 years. But of course, there's nothing wrong with the company per se. It's a, very good management, very good business. So everything else is in its favor except the valuation.
Okay, all right. Except the valuation, everything else seems to stack up for Tata Elxsi. Technically, what is the call, Vaishali?
So, even I've been tracking the stock since a very long time, and I think if you see the weekly chart and all, the stock has only been in consolidation and currently at a fair value. So, I would say I would recommend even to add more at these levels, because once the stock starts getting in momentum and we see this moving above 7,800 levels, I think this would very likely again retest the previous high of 9,000 plus. So my view for now is positive. I would be a buyer at this level.
Okay, all right. You would be a buyer at these levels for Tata Elxsi. Madhvi Srivastav now writes to us from Patna, holds 5 shares of HCL Tech, which is bought at 1,000. Wants to know the outlook on IT stocks as a whole. Fundamentally, Shahina, HCL Tech, as well as the entire IT pack, considering what would your pecking order be within that, and where does HCL Tech feature?
IT sector as a whole is coming back into the investor list for buying, and I think this is more on back of the improved performance that is likely in FY25 versus FY24, both in terms of deal wins as well as in terms of growth, revenue growth. Here, I believe HCL Tech will do well. Of course, if you're asking me my pecking order, I would still prefer one of the larger ones like Infosys and TCS. And if you look on the other end of the spectrum, I would prefer the other smaller ones like maybe a Birlasoft. You have Persistence, but at the same time, if you are an investor in HCL Tech, have been holding it for some time, the stock will continue to do well. I believe here also they have got a number of tie-ups that they have done in the last 6 months, which are actually going to drive growth. And valuations also are not expensive, so one can continue to hold and expect a decent return over the medium to longer term.
Okay, all right. And technically, Vaishali, any call on HCL Tech, and how does it feature as compared to the other IT stocks?
So let's start with the IT index. Most of the stocks have a similar pattern. IT index is showing signs of reversal, and likewise, all these stocks, they are pretty much on the same pattern as far as the technical chartical reading is concerned. So HCL Tech also is showing signs of reversal, and I would say if not in a hurry, this stock can be accumulated, because we saw a good consolidation coming at around 1330, 1350 levels, and from there on, the stock has taken off. So now I would say on a near-term basis, 1400 to 1380 would act as a support. And once we see the stock getting into an uptrend, I think this is ready for a target of 1600 to start with. So I would say it is hold, or one can keep buying in decline.
Okay, all right. Amandeep Singh now writes to us from Haryana. He holds 10 shares of Nykaa, which he's bought at 150. He wants to know what to do, whether he can buy more at these levels. Vaishali, do you think that there would be further upside on the technicals of Nykaa?
Well, Nykaa is showing some sign of weakness. The confirmation only comes above 175. Right now, currently, we are at 166 levels. It is making lower top. So I would say there is no conviction in buying right now. But what is also important is the stock should take support. If it has any meaning, it should take support at 160 levels and look for a reversal from there on. But I would be a buyer only above 175.
Okay, you'd be a buyer only above 175. And fundamentally, Shahina on Nykaa?
Well, I would agree with Vaishali. There's no rush to buy this stock. The main issue is the valuations. Of course, today's their meet and they are giving very aggressive targets. But, with a 47,000 crore market cap, I think there's a long way before valuations, at least to me, will start looking attractive. I would not be buying at current levels.
Okay, you wouldn't be buying at current levels. Well, that's on Nykaa. That stock has not gone anywhere in the past 6 odd months. We need to take a short break, but we would like, as we do that, we would like to thank all our viewers for your continued support. CNBC-TV18 recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted. We had a viewership of 91%. CNBC-TV18 beat competition by a massive margin. From investors to India Inc., the CNBC-TV18 election headquarters was the go-to for election insights. Once again, thank you for your trust and faith in CNBC-TV18. Welcome back. You're still tuned into Your Stocks. We have with us Vaishali as well as Shahina to answer all of your stock queries. Well, we now have a query on LIC. Sunil Kumar writes to us from New Delhi, holds 10 shares of LIC, which is bought at around 600 odd rupees. Wants to know what to do, whether this would be a good stock for the longer term or not. Well, sitting on a good profit at this point, so he's already made some money on LIC. But would it be a good stock then to hold on to Shahina? And if so, what would your time horizon be for LIC?
Well, it's possibly a portfolio stock. There has been some clarity now that the insurance regulator has come up with, as you know, yesterday, in terms of the surrender valuation and what values to be paid for more than 1 year holding. And while it may affect, profitability to some small extent, because even the persistence ratio for LIC is about 77%, so which is lower than which is going to impact their profits to some small extent. But what we've seen in the last year is that with a lot of new products that they are coming out with the market, and also the potential that they may be able to, over a period of time, expand their portfolio even to other insurance, like health insurance, etc. I think one can continue holding LIC for the longer term. So I would say hold. You could keep a stop loss, of course, because being a PSU, the government may come up with some further, FPOs. So I think to that extent, you can keep a stop loss. Maybe somewhere close to about 1,250 would be a good stop loss.
Okay, 1,250 would be
900. I'm so sorry. 900 would be a good stop loss with a target of 1,250.
Okay, all right. Stop loss 900 and a target of around 1,250 or 1,250 odd rupees is what you are aiming for when it comes to LIC. Vaishali, technicals, what do they tell you? Good outperformance for the past 1 year?
I do agree, because LIC, now that I'm looking at it chartically, I think it's on poised to go towards 1,200 levels. So I would say yes, continue holding, because there is still a lot of scope for upside. But of course, the stop loss has to be maintained. And I agree that yes, 950 to 1,000 levels is the level where one can see that yes, 1,000 should be the immediate support level. So that should not break.
Okay, all right. So that is on LIC. Aditya Sharma now writes to us from Tamil Nadu, holds 20 shares of PNB, which he's bought at around 30 odd rupees. He wants to know what to do, whether he should remain invested in PNB or not. Currently, he's sitting on a bit of a profit when it comes to it, that particular stock. What would your target be on PNB, Vaishali, and your stop loss as well?
So, well, I think PNB has already seen a good run up. Currently, it's just consolidating. So, what we need to see the near term, I mean, depending on the time period that he's ready to hold on to, let 123 be the stop loss, and the stock gets further strength only above 130, 132. And if that is so, then we can look for a target of 140.
Okay, look for a target of 140 on PNB. The stock has rallied around 45% in the past 6 months. Well, Shahina, PNB, does that enthuse you at all on the fundamentals?
Well, it's a decent public sector bank to hold, with price to book just about 1 year forward of one time. I don't think it's that expensive. Balance sheet is improving, so one can hold.
Okay, all right. Well, we do have another query now. Kabir is writing to us from Gurgaon, holds 10 shares of Zomato, which he's bought at 100. He wants to know what the prospects of his investments are and whether to hold or to sell this particular counter. So he's just about sitting on a marginal amount of a profit there. Shahina, first over to you on Zomato.
Well, it is, I think, one of the most interesting new age stocks one needs to have in your portfolio. Of course, you can hold it with a stop loss, but fundamentally things are improving in terms of profitability, and I think even Blinkit, things are improving there. Very strong, aggressive growth in their stores going forward, and also I think in terms of profitability they have broken even, so things are looking good. But only thing maybe for this quarter, 2 quarters, you could see some bit of softening in margins because of the aggressive expansions. But I would hold it through. And again, there you can keep a stop loss if you like. Maybe keep a stop loss of 150 and targets of more than 230.
Okay, targets of more than 230 odd rupees. Remember Zomato, they're looking to pump around 300 crores additionally into Blinkit, with the total investment touching around 2,300 odd crores. So that would be really the big piece to watch out for. Vaishali, a quick call on Zomato?
Well, I would say the long-term trend is very much intact, and I think it's just going through the consolidation period. This could be a good opportunity at around 170, 175 levels to add more, because the way we are looking at projected target, it quite matches with Shahina's. It's 220 to 250 levels. So I would say add more at 175.
Okay, all right. Well, we now have Harsita, who writes to us from Hyderabad, holds 150 shares of Aarti Industries at 1,000 odd rupees for 3 years, wants to know what to do, whether to book her losses or to exit at current levels. So Aarti Industries is what she's looking at. The buy price is around 1,000 odd rupees. She's sitting on a loss at this point in time, quite a steep loss. Well, the news incrementally has been positive for them, for Aarti Industries, but this entire chemical down cycle that we've seen, Shahina, what would you recommend from that perspective?
I don't think the chemical downside is totally behind us, and we are likely to see some bit of more pain during the current year, at least in terms of the growth that we are likely to see. Competition is likely to be very aggressive. The problem with Aarti Industries, and why I would suggest that the investor book his loss, is that even if the company is able to do the growth targets that the management has set for itself in FY25, which is both volume growth as well as profit growth, volume growth close to, I think, 30%, that's the target. I would say that valuations still remain extremely expensive. If you look at EV by EBITDA, currently it's about 27 times. So I would say that the consolidation at current levels, around the current levels, will continue for at least a couple of quarters. So I would book at least part losses.
Okay, all right. You would book part losses in Aarti Industries. Yes Bank is the next query. Dipali Jain writes to us from Tamil Nadu, holds 10 shares of Yes Bank, which is bought at 20. Wants to know if she should buy more stocks of Yes Bank. Would you, Shahina, buy more stocks of Yes Bank?
It's a risky bet. So I wouldn't buy at current levels. Maybe you can look at dips to buy it, because there are counterbalancing issues going on over here. On one hand, the Yes Bank is trying to raise funds and valuing itself at higher levels than what it is currently, which is about 7.2 billion. So it's valuing itself at 8.5 billion. So that is there a positive if they can find a good suitor. On the other hand, you have an overhang of liquidity stock that is there, because Kyle is selling, has been selling. So I would say on a balance, you can hold, buy at lower levels, and then wait and watch as to what happens in terms of the M&A in the stock.
Okay, all right. Vaishali, Yes Bank on the technicals?
So I think it is showing some signs of improvement, but I think conviction comes only about 24 rupees. So once if it sustains about 24, then I think it's ready for targets of 27, 28. So I would wait and watch.
Okay, wait and watch on Yes Bank. But on that note, Vaishali as well as Shahina, we're going to thank you. Thanks very much for joining in and giving us all of that perspective. We need to wrap up on the show with the news that the markets are going steady. In fact, the mid-cap index has picked up pace and the advanced decline ratio has marginally improved as well. Maybe that advanced decline ratio chart should come up for you, and let's see what the gap is between the red and the green line. A couple of stocks which are managing to gain and have been for the entire week is UltraTech Cement. So that stock is up 7.5%. HDFC Life, after the changes in that surrender value, that stock is up around 6.2% on a week-to-date basis. ONGC, positive comments coming in from the oil and gas minister as well. So ONGC is up around 5.8% on a week-to-date basis. And a couple of other gainers include Shree Cement, BPCL, Hero Motorcorp. All of these stocks managing to see some amount of traction. That's all the time that we have on the show, but do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell up next.